Good morning, everybody. How are we all doing? Morning, Evil. I've got a new mic software, so hopefully the sound is okay. It looks to me like it's booming in the red quite a lot, but hopefully it's all right. So in the video, as you can see, my backdrop's gone. The video broadcast broke. They updated it and it just broke. So I've downloaded something called Steel Series, which is another mic thing. So hopefully it's all right. I have done some recording on it and it looks okay. Well, it sounds okay. It doesn't look okay. It sounds okay. So hopefully that's all right. Anyway, so if you need to turn me up or down this morning, obviously do that because it looks to me like I'm a bit loud, but I have just tested it and it seems fine. Right. So this morning we're going to do the usual stuff. We're going to look through the see what's going on with the indices, look through news. It's non-farm payroll week this week. Morning was check. So we've got the ADP non-farm employment change this afternoon before the news. We've also got GDP numbers this afternoon and PCE. So it's a hell of a busy afternoon today. We've got CPI coming out this morning for Germany, which will be released in stages this morning. And we've had CPI already for the Aussie dollar this morning. So all the news kicks off today. We've got Trump speaking at some point tomorrow. Apparently, we've got Trump speaking about something else today as well. Or was that? Yeah. Oh, that was last night. That was to do with the car tariffs and stuff, wasn't it? So basically, news kicks off from here. We were also going to look at 3-bar reversals in a little bit more detail this morning. Sounds a little different, just a bit more metallic, but yeah, okay. Down a bit. It will sound different because it's a different thing. The software that I've got has got like about 100 sliders and stuff, and you can do anything with it. So I could basically make myself sound like I'm in a box if I wanted to. But anyway, so yeah, we're going to go through 3-bar reversals this morning. I'm going to be doing some back testing on a 3-bar reversal strategy. So this morning is about identifying the different variations of 3-bar reversals, of which there are quite a few. So some of them are better than others. So I want to test the different 3-bar reversal patterns and go through, make a list of them basically, so that I can create all the logic to create an EA to backtest all of them. All with stop loss based strategies. So the opening range breakout, or rather the position trader EA, has in there the 3-bar reversal signal, which has settings for different wick lengths for the individual candlesticks. But we're going to look at basically all of the different types this morning and draw up an exhaustive list, if you like, of the different types. And that's just a case of eyeballing charts. So 3-bar reversals, if you've been watching me for a while, you'll know is the pattern that I used to trade mainly on the 4-hour time frames. It is one of the best reversal patterns you can get. Where's my pen? It's incredibly reliable because the story behind the 3-bar reversal, there's 2 of them there, creating an M pattern reversal market structure break. Same thing. But anyway, it's an incredibly strong pattern because it is telling a story as to what is happening with price action between buyer and seller balance, if you like. So that's what we're going to do this morning. I need to get Word set up so I can make a note. Where the hell's that gone? So yeah, we're going to, oh, geez, that's big. We're going to do that this morning. And then I will work on the EA, basically. But you can visually backtest all of this. It's just obviously doing it with an EA is a hell of a lot faster. So, morning, everybody else. Morning, Ace. This is good about 3 bars. Was wondering about percentage settings in the EA. Yeah, so the EA's only got one pattern. And it's kind of the main pattern I prefer to use, but there are lots of variations. Morning Outro, morning FTNet. So all of these, they all work, but they are all different. So, I mean, there's a 3-bar reversal here right now on the pound US dollar. And this is partly what I want to draw this list up for. There's two on the chart here. There's three on the chart here, but they are, as you can see, very, very different. We're jumping ahead. I'm going to come back to this. So remind me of the pound US dollar. I'm going to write that down over here. GUH4. There you go. We'll come back to that. We'll do it all in a minute. So starting off with news. Obviously, today's very, very busy. We've had the Australian CPI numbers out this morning. The Aussie dollar has rallied quite considerably on the back of that, as you can see. That's that candlestick there. So if we look at the hourly chart, we've had quite a big rally today. We've hit ADR. So Aussie New Zealand ADR hit to the upside today. It's come straight off. There's a 3-bar reversal forming potentially now. But the rest of the Aussie dollar pairs, as you can see, we've had a bit of a push, but nothing particularly dramatic. We've done roughly half an ADR on most of the Aussie pairs. So a little bit more on the yen. But yeah, not a massive move on it, considering the numbers, all massively positive. So the quarterly, we are above forecast, although the forecast was 0.8, we've only gone 0.9. So it is just a tick above, really. So it is still good. We've ticked up, or rather stayed the same on the annual, where they were expecting a drop. They've stayed the same. So again, inflation becoming very sticky in Aussie, which we know was anyway, but with everybody else, it's still sticky as well. The trend is gone up as well. So it's all bullish Australian dollar. That doesn't mean necessarily that the Aussie dollar is now going to take off, because they're not going to be increasing interest rates at the moment. The last thing any central bank is going to want to do with these tariffs riding throughout the world is increase interest rates. They want to drop them. So it is bullish. We have had bullish movement, but not sure it's going to be sustained. And you can see the market already pulling back on this today, as London is starting to open. So we'll see what happens. But Aussie New Zealand is a hit on the ADR. We've also got a weekly hit on the Aussie New Zealand now. So there's your start of the week. That is our average weekly range. This is taking into account now the craziness of the last couple of weeks worth of tariff movement that we've had. So it's probably not too far off. So getting weekly hits is, probably something that is worth looking at. I am short already Aussie New Zealand. I am also short Aussie US. Pound odd is extended as well on the weekly, but that's already come off basically. So that's already paid out if you took that one. Pound New Zealand. Again, I've got shorts on that at the moment as well. So that was a 4-hour RSI extension short. So I'm looking for a push back into there. So yeah, there's a few extensions there to look at. But the rest of the day's news is going to be spread out throughout the day. So the German CPI is coming out this morning. That comes out as 6 states release their numbers. So the 6 states, Bavaria, etc., in Germany, they all release independently their CPI figure. And then we get a result at the end of it, basically, which is the average of all of the states. So you'll see on Financial Juice this morning, they will get drip fed out and start appearing in here, which gives you an idea. Once one comes out, they all kind of tend to go the same way. So when the first state is out and the second state really comes out, you're likely to know what that number is going to be. Again, whether or not CPI is going to play a major part in movement now, very hard to tell, because obviously there is still an awful lot of bubbling with Trump at the minute and talk about tariffs. He's not finished by any shape or form at the moment. So I think all countries at the moment are just kind of trying to put the brakes on a little bit and reassure banks and businesses that there's not going to be any major changes made, because they need right now stability. So unlikely that a higher or lower than anticipated CPI number is going to drive anything more than sort of 100 ADR maybe, and it will probably pull back from it as well. So watch these as they come out, but I don't think we're going to find, unless they come out ridiculously different, if we suddenly come out month on month at 1.4 or something, then yeah, it's going to spike through the roof. But I don't think it will. These figures here are month on month. So we're actually looking here at March figures before tariff announcements. So obviously inflation wasn't being affected by tariffs. And this month, potentially not so much either, because companies have got stocks of products and things. So it will kick in. These tariffs will really start to kick in on inflation in the next 2 to 3 months. So the forward figures are going to be much more important than the ones we're seeing at the moment. So 115 non-farm employment, that tends to be a whipsaw. Doesn't really give us an awful lot of movement because we're waiting for the proper numbers, which is the unemployment rate on Friday. We got GDP for the Canadian dollar released at the same time as the US GDP. So these two potentially will move the market this afternoon. We are forecasting a massive drop on GDP for the US. So it'll be very interesting to see what that comes out at. We're going from 2.4 down to 0.2. It's a 2.2% drop in GDP, which is absolutely massive. Market will have factored that in already, but not that you could tell because the markets are such a mess at the moment. So we'll see what happens with those. But that's all coming out an hour before news. I'll be back on at 2:30 for the New York Open. And then half an hour after that, we've got the PCE index coming out, basically. So that's the next piece of obviously major news for the US dollar. So we're bracketed before and after the open with news today. We've got preliminary news coming out. We've got Trump speaking again tentatively later. Tomorrow, we've got the Bank of Japan interest rate decision, not expected to change. And then we've got the press conference. So there's going to be a hell of a lot of movement over the next sort of 24 hours. Whether or not any of it is really going to stick, we'll have to wait and see. Anything that happens here, as we know, Trump will come out and say something and he can either rally it further or we can completely reverse it. So we've got to be aware of it, though, because we are going to get movement. So at the moment, the main things to pay attention to with this news is if you are in something, for example, me being in the pound New Zealand here at the moment short, and the news event drives this down, it's an opportunity to do something with your trades. Not necessarily to say, oh my God, I really need to sell this now. It's just, it will move dramatically. So it's either a signal to start getting into more or get out of something. So there we go. So there's the ADRs. RSIs are pretty flat on the hourly. They have been flat on the hourlies for a while. We're just basing around and grinding or hovering sideways at the minute. We've got 2 extensions at the moment still in play. Pound New Zealand H4, which I'm in. I got in this one already. Short. So this is the new position, or rather my position trader account, which I've just restarted. So I'm in short on the Pound New Zealand. Aussie New Zealand I'm also short on as well. So a couple of positions on both at the moment. Right. So there's that. Morning, Chris. So let's have a look at the indices. Yesterday was whippy hell. Right old mess yesterday. Pulled it back to a 691 loss, but the markets yesterday were the most frustrating thing in the world. S&P 500. So S&P got a break long, pushed up, hit resistance. I was at that point when we broke up yesterday, I was sitting there looking at my P&L and I was about $200 up. Because we'd had losses in the morning on the FTSE. Well, I had losses on the FTSE. And I was like, shall I take that? And I was like, yeah, it's probably going to bounce. But if it doesn't bounce and it breaks, we're going to get a nice move. And targets were up here. So I decided to leave it. And of course, what it did was come down. And because it had moved more than 20% of ADR, it triggered my trailer. So I got trailed out and then it popped. Same with the NASDAQ. NASDAQ came down. My stop loss, as you can see, was there. So I didn't get stopped out on the NASDAQ. And that one was a lovely, profitable trade. But other than that, the market, this open was just whippy as hell, straight up, straight down, straight up, straight down. That's all it did. The Dow was a double stop out. So there's your open. So broke long, immediately hit resistance and stopped out, went for the short, came back up. Even if you'd taken that long, you sat around all day and it's the same price action, as you can see. So the problem we have at the moment with these indices, which is, it does happen every now and again, but not as much in the last couple of years. We haven't seen quite as much confluence as we're seeing now, is that they are very, very, very in tune with each other. If you flick through all three of these, price action is, oh, that's a DAX. The price action is very, very similar. Yeah. So if you put the NASDAQ and the S&P 500 next door to each other, you can see the price action is almost identical at the moment, because the market are basically scared of any kind of investment. So we're in that fear and extreme fear mode at the moment, which means that there's no sector purchasing going on. There's no individual stock purchasing going on for investment purposes. They are buying and selling customer orders at the minute, but there's no long-term plan. There's no long-term confidence. So they're not going, right, let's buy tech, let's buy oil, let's buy motor, let's buy medical, let's buy this, that, and the other, which is what differentiates these indices. They are basically selling all stocks, buying all stocks. So you're seeing, regardless of what sectors are inside of these, so we've got tech, normal mixed business, and industrial. Yeah, it's the same thing at the moment. So just bear in mind, when you're trading the US indices at the moment, they are almost identical. So where you get stopped out on one, you will probably get stopped out on all. Where all break clean and make a profit, you will probably break clean and make a profit on all. So what you're actually doing by trading three indices is you are replicating your risk threefold at the moment. That's not normally the case. We've seen plenty of times where the Dow breaks short, the S&P breaks long, and the Nasdaq's gone flying before them. You know, and they're out of sync, which is normal, because if there's a massive reason to buy tech stocks, the Nasdaq will fly, but the S&P will creep, and the Dow might just flatline because it's got nothing to do with tech. So you can see the confluence at the moment. So just be careful with risk. It's one of those things. It's a double-edged sword. When you get a clean break, you get a clean break and you clear up. When you don't get a clean break and you get whipsawed into a double loss, you're taking 6. So just be a little careful if you're trading them all at the moment. I'm going to monitor it over the next, I think I'm going to give it this week really, and see how we go. But this week I've had 1 winning day and 2 losing days. The losing days are small, 690, and I think it was 170 the day before. One trade will get all of that back, no problem at all. But what I'm concerned about is at the open at the moment, we are just seeing a lot of this. And that is not conducive to the strategy. So it's either a case of I may reduce risk and halve the risk, basically, until we can see some movement getting going. But the problem with doing that is when the movement gets going, you miss it. So it's a tricky situation at the minute. I know a lot of people are sort of sitting on their hands, and a lot of people are reducing risk at the moment because it's very difficult to judge anything on this. So, but anyway, that's where we are. That's nothing we can do about it. You need to play the markets, or rather the markets need to play your strategy for you, don't they? So DAX long, FTSE short. So good example of negative correlation here. Obviously, these guys are doing the opposites today. But usually when this happens, one of them will lose. So if we are going to do that on the DAX, we'll probably do that on the FTSE, which means we'll stop out on our short and attempt to go long. But we will see what happens. But hopefully we'll be able to get at least one of these on a nice clean break today. Let's just quickly look at where we're potentially going with them. Right, so we're out into all-time highs on the, well, not all-time highs, but we're out into new highs on the DAX short term. FTSE, there's your downside support. So partial close is probably not in a bad spot. Might just move it up slightly. Just conscious that with this one, obviously it works on candle close. So I don't want it to bounce like that, because obviously that will miss our exit. An upside, yeah, again, we're going into all new high territory. So let's see where we go. Right. If anybody's got any FX pairs they want to look at, let me know. I've gone through the RSIs and ADRs. There isn't an awful lot. I did have a quick scan through this morning on the hourly time frame. We are breaking out into kind of new highs a little bit on some of this stuff, but it's the ranges that we've had recently have been very, very choppy and very mixed. So right now we are selling out of this propulsion gap here, which broke that low. That basically was the real breakdown, but as you can see, it was horrible and grindy, so it didn't do an awful lot. But most stuff, we are still in the same boat. So we are completely sideways. I am betting on Trump starting to roll back a little bit on these tariffs. And obviously these 90-day freezes we've got in have done the trick. They've frozen the markets. They've stopped the catastrophic drops in the dollar and the stock markets, which obviously he was told, I guess, to do by people with brains. But I'm betting on some kind of mean reversion on this at the moment. So I'd be more inclined to look at breaks short at the moment on things like the Aussie US, or any US pairs looking at breaks long, to give the dollar a little bit of a boost. Obviously, with the numbers coming out today and on Friday for unemployment, there's a good chance that any positive catalyst will actually give the market a bit of a boost. But as you can see, everything is still very, very sideways. This week so far is there. Yeah, we haven't really done anything on most stuff. So the markets are just dead at the moment. We are flip-flopping around intraday. Low time frames, still not too bad, but directionless. Very, very directionless at the moment. I took a pound on took a long on the euro pound as well. Looking basically for, we are stalling out a little bit down here. So I saw a lovely price action pattern yesterday and a reversal alert go in yesterday here. So we put in this triple bottom look. I thought that looks pretty solid. We had a lovely big spike up and then we pushed down again. And I thought if that pushes back up again, this looks like this is going to hold. So I got in. Obviously, it went straight into propulsion and came back out again. But anyway, so I'm long on that. We just had a reverse alert going this morning, which is great. Euro CAD, absolutely sideways. We've done absolutely nothing this week. So it's Monday, Tuesday, today. Last week, just not going anywhere at all. Pound US dollar, we have had a good rally up on Monday, but we went straight into that double top. So I've sold the double top on the reversal alert retest. Looking for push back down into propulsion. And everything else really sideways. Yeah. So like I said on Monday, at the moment, the players sell the high and buy the low until you are proven wrong. But if there's something that's moved a great distance, I think there's a good chance that we'll get some propulsion gap fills attempted. So, but you know, as you can see by most of this stuff, it is just sideways. So, not really any use to anybody, is it? At the minute, euro odd, just you know, it's literally flatline, like the heartbeat. We've just dead. Markets are dead. There is absolutely no interest in any kind of speculative investment at the moment. Anything with any risk attached to it, banks and institutions are just sitting on their hands and waiting. They can't do it forever because they've got to make money. But, you know, the minute you can see, there's just no interest at all. So not many people making money at the minute. unless they're on very, very short time frames. As I say, short time frames is where it's at the moment, low time frames, and just trying to ride as much of the intraday price action as you can. But, you are going to get chopped around a lot. Low time frames are choppy at the best of times, and at the moment, very, very difficult. Which brings me nicely on to 3-bar reversals, which is what we're going to look at today. So one of the reasons I love the 3-bar reversal is it works on any time frame. So anybody got any questions or anything else they want to look at in regards to that? Stopped out on the FTSE. Nice and easy. Oh, lovely spread. Look at that. There's the high of the candle. There's my stop loss. We never got there. Look at the size of this spread today. There's just no volume. FTSE's, look at the DAX spread. Tight as anything. FTSE. Look at that. Spread moved there without a ticking. It's jumping all over the place. There's absolutely no volume. Stop out there. Obviously, open profit at the moment is good. So still chasing yesterday's loss a little bit, but see if the DAX can save us today. Right. Okay, so 3-bar reversals. So that's what we're going to discuss this morning. The purpose of today is to put together a list of the patterns. So with a 3-bar reversal, for those of you that have watched the members streams about price action, of which I did quite a few at the beginning when I started doing the members streams, the 3-bar reversal is my favorite pattern. Let me open a fresh chart. So the 3-bar reversal is my favorite reversal pattern. There's different variations of 3-bar reversal. One of them is a 3-bar reversal, and the other one is a 3-bar pattern. A 3-bar pattern is basically something that is used quite often after 3-bar reversals have been put in. So when you get a 3-bar reversal, basically it's the peak of a move, and then you often get what's called a 3-bar pattern, which is the bulls trying to regain control and then getting overpowered. And that is what gives us our M pattern reversal. So we're just going to focus at the moment on that part, which is the 3-bar reversal. So a 3-bar reversal basically is an indication of exhaustion. So 3-bar reversals should only be traded at a high or a low. Yeah. So if you see a 3-bar reversal pattern happening, there's one here. Perfect example. If you see a 3-bar reversal happening within a range like this, yeah. So we haven't moved down and then we are putting a 3-bar reversal in. They are to be ignored. Yeah. So 3-bar reversals happen at the high or the low of a period of time. So the way that I used to trade them was on a 4-hour chart and an hourly chart, and I used to use them as a price action signal at support and resistance. So they had to be hitting a previous resistance area, which means that they will have pushed towards the resistance area. And by default, when you're trading them on either the hourly or the 4-hourly time frame, you will be at the high of the day or the high of the week. Yeah. So what we're looking at is we're trying to gauge the exhaustion point where the bulls, in this case, run out of power, or the bears run out of power. Yeah. So it's that point where we are starting to either pull back for a continuation or reverse completely. Yeah. So here's a great example on an hourly chart. This is pound New Zealand hourly. So you've got a massive strong bull push, okay, after a big rally up. And then we have the exhaustion, which is where the bulls basically have run out of steam, which means that there are no more sellers available. And this exhaustion wick is indicative of seller pressure running away. So what happens is when you're buying, you are saying, I want to buy at this price, 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 and you keep buying as long as there's somebody on the other side there with an equal amount of sell orders to what you have. And you will keep doing that until you run out. And when you run out of sellers that are going to buy your orders, you have to go higher and higher and higher to try and find those sellers. And eventually there aren't any. So you have no choice as a buyer but to go, I can't buy anymore. Because you've driven the market up, and I'm talking about banks and institutions and market makers here, because you've driven the price up, your only option is to exit your position, which means you become an instant seller. If you've bought to exit, you sell. What you do is you sell a large portion of your order, which creates a wick. Yeah. So it's an exhaustion where buyers have just basically gone, we can't buy anymore. There's none left to buy. We've run out of stock. So let's sell it. Yeah. And that is where you see the exhaustion pattern. So it's indicative of an exhaustion. And this part is important, which is why we have the setting in the position trader EA for wick size. Yeah. So it doesn't matter what that is, whether that is a bull candle, a bear candle. It doesn't matter if it's a doji. Doesn't matter if it's a spinning top. It doesn't matter if it's a shooting star of bull or bear color. Yeah. What it is an indication of exhaustion. So this is exhaustion to the upside. This is exhaustion to the upside. This is a lot more exhaustion to the upside. Yeah. They have tried to push down. They've tried to push up. They couldn't. It's indecision. It means that there is no advantage for bull, advantage for bear. Because we're coming out of a bull run, it means the bulls have run out of steam. Even if it's a doji or a spinning top, it means we've run out of steam. We're out. Yeah. The important part next is the bears step in. Yeah. So the guys that were buying cannot buy anymore. They get overpowered or become sellers, one or the other. And then the selling price action starts, which is indicative of no more buying interest in the market. And that is the point in which we go, right, there is our 3-bar reversal. On a lower time frame here, you will find a market reversal alert, an M pattern reversal. Yeah. So somewhere in here on yesterday's price action, you will find a reversal alert. Let's look at M5. Bit of a tricky one, but there's the reversal alert there. So that's the last bear candle before the high. There's your reversal alert. So when you see a 3-bar reversal forming on the lower time frame, you will have had a market structure shift, because for the bulls to run out of steam, it means the bears have taken control, which means that the M pattern comes in, which is why the market reversal alert is so good for multi-time frame analysis, because you are catching this part of the 3-bar reversal. This is the confirmation. So if you think of a market structure reversal alert, it goes like that, pushes back, retests, and comes back down again. You will have had a run up, exhaustion wick, and then a push down. So the reversal alert on the lower time frame, like M5 in this case, is part of usually the tail of the 3-bar reversal. Okay, so there's different powers of 3-bar reversals. So the first rule with any reversal pattern is it's got to be at a high. If you get a 3-bar reversal, a pull, a pause, and a push, which is not a run down into a low, this has been pushing up, and it's one candle pullback and then a wick like that. That's not a 3-bar reversal. That's more of a continuation pattern, isn't it? But it's not. It didn't continue because it wasn't at the end of a move. It needs to be after a strong push in one direction. It doesn't matter how many candlesticks are bullish in this case, or if it was coming down, how many candlesticks are bearish and bullish. The mix in there is irrelevant. What is relevant is you're constantly making new highs and lows over a period of hours. Yeah. And then you get to a point where we just go, oh, I can't go any further. Yeah. The wick is the key. And then basically they take over. So that is the point of interest for us. There's many, many different variations of this, which is what we're going to be looking at today. So this is a 3-bar reversal. This is a 3-bar reversal. That is not really a 3-bar reversal, but it's not far off. That's not a great one. Yeah. So that is a great 3-bar reversal. But look at this, the wick's on the upside of that. But it's not a great 3-bar reversal. It is a 3-bar reversal. It's a bear, a pause, and a push. But it's not that pattern. Yeah. So this is what we're going to look at, the different variations. So as you can see, if you'd have entered on that one there are multiple places to put a stop loss if you're using it as a stop loss strategy. Some people go in tight. Some people go in conservative. I've always been of the conservative ilk because the high probability is that if they couldn't buy up there and they got forced away, they're probably not going to be able to buy above that price, because if they could, they would have then. So the M pattern will usually be a lower right shoulder than the wick of a 3-bar reversal. So that makes the logical place. That's more aggressive, and a lot of them will work with stops there. And obviously your reward that you need is a lot smaller. So if it pushes down to there and then pushes up and does this, you'll still get out with a nice profit in that point. So there's lots of different types, and this is where your discretion comes in a little bit. So this is a great example of one. I'm going to take some screenshots of these as a point of reference. So obviously strong push, complete rejection. So the main differences you're going to have are going to be to do with candle. Sorry, let me just number these candles: 1, 2, and 3. Yeah. So candle 1 in a bullish 3-bar reversal is always going to be a bull candle. Yeah, it's a strong push. The market is pushing. We are rallying. Okay. Candle number 2 can be multiple different types of candle. Okay. Ideally, you want an upside wick rejection higher than that previous high to show that we have gone through the previous area, but we were not able to hold that previous area, which means either there is no stock there, or the stock there was way stronger than the bulls and the bears have now taken control. So this close should be below that high. Ideally, the high of this candle, candle number 2, will be above that high. Yeah. So it's a real exhaustion. Yeah. And then candle 3 should ideally close below the low of candle 2, which is indicative of definite advanced selling pressure. So the bulls have taken control. The bulls have lost control. The bears have now taken control by closing lower than the previous low. If that close is lower than the previous close, that is still a valid signal. It's just not quite as strong as if they have really taken control. Yeah. The wick size here is also important because the downside wick here shows that although the bears took control, they pushed back a little bit. Okay. So there is still a little bit of buying pressure. And that shows you that basically, and obviously you can see by the candles after, there's still buying pressure there, which means that they were not able to just completely reverse that move. Okay, so that's one example. I'm just going to pop that one in there. Wait a minute. So if that candle closes, let's just find another example. 4-hour time frame. Right, so there's a good example of the other type I've just been talking about. Okay, so we've got a large bull candle pushing up. We've had a rally up, so we pushed up into new highs. A little bit rejection at the top there. The next candle pushed up, made a new high, but the close of that candle was below the high and the close, in fact, in this case, of that previous candle. So exhaustion to the upside, but it's not much exhaustion, is it? And look at that. Sellers tried really hard to rally back down again, but they got pushed back up. So there's a lot of bull pressure in there. Yeah. So this is a spinning top, but we have got a higher high and a higher low. So the bulls actually still in control, but not really. The next candle, we put in a lower high there, and the bears took control and closed below that low. And obviously our wick was below that high, that low there. So we got lower high and a lower low and a close below. So that is still a valid 3-bar reversal. But the thing that makes this one not as powerful as the one we just looked at was this massive wick here, showing that actually the bulls were still in control. So that is still a valid 3-bar reversal, but from a power perspective, not as good. Yeah. A textbook one is a push, a pause, and then a pull, where you've got very, very solid rejection to the upside there. And it doesn't matter if that's that big or if it's a shooting star, if it's a doji, if the candle's like that big and 50% of the wick of the candle is wick, that is still very strong rejection to the downside. That is very strong rejection. In fact, the wick there is longer than that wick, which means there's actually more buying pressure in that candle than there is selling pressure, isn't there? Because they tried to push down, but they got pushed all the way back up here, which is pretty much to where we closed last time. So bulls won that, yeah? Although it's a bearish candle, and this is why the body of the candle is not that relevant. What's relevant is the rejection. Where is the rejection? Yeah, and this one didn't work. So the bears tried again. They got pushed back again about 30%. And then we had an inside bar, which is indecision. Yeah, and as you can see, they then carried on the move. Good example there of a push up, very strong rejection, but continuation from the bulls. So if that candlestick there had been a little bit of a wick and then a big bear candle, that would have been a 3-bar reversal. There's your rejection, and that would have been the bearish price action, but it wasn't. Okay. So there's another example of one which is not good, and it's all to do with the where the price action is closing. Morning, Mark, and the rejection, how big the rejection is. So this is why I have the rules in the position trader EA for wick sizing. So ideally, this lower wick on bar number 2 should not be more than 50%, should it? So if you think about the candlesticks you're looking for in the middle, we either want something like that, we want something ideally like that, or even better like that. Yeah, so big, strong, and that would be red bear candle. Or we want a doji, but it's quite small, the doji. What we don't want is a very large wick to the downside, which is bigger than the wick to the upside, because that's indicative of more buying pressure than selling pressure. So this wick should be smaller than the upper wick. The body size isn't actually that relevant. Yeah, so that's a bad example of a 3-bar reversal there. Let's find another one. There we go. There's another one up there. So nice and clean. Big, strong. Oh, there's another one to the downside there. So again, this is not a great one, but it did work out in this case. But if you look at the price action here, we haven't been selling off dramatically here. We sold off for 3 candles. We tried and we completely failed. And then it took the market 3 candlesticks, 12 hours, an entire session, to not even get to the low of that candlestick. So where this one has actually appeared, technically, is the low of the week at that particular point. But the price action is very small here. Yeah, and there's more, again, upside rejection, which means there's more bears in control there. The bears are in control there. The bears are in control there. And then we get the bulls in control. What we want is the bulls in control, no one in control, and then the bears taking over. Or the bulls in control, the bears in control, and the bears taking over. Yeah. In this one, you had the bears in control, the bears in control, then the bulls in control. There was no pause in the middle there. So not a good example. This one, better, but not ideal. Long, strong push up. This is not the high of the week. The high of the week is there, but this is pound New Zealand, so that was probably some kind of weird broker spread. So technically, that probably is the high of the week. The best way to measure this would be the high of the last X candles. So what we want is we want this high or this high to be the high of the last 5 candles, 6 candles, 10 candles. Again, it's going to all be tested. But so big, strong push up, indecision, bears taking control, close below the low of the previous candle. The thing that I don't like about this one is the rejection is more on that candle than on that candle, but it doesn't matter too much. If that is the high of the day or that is the high of the day, that's okay, because you could have a double top there, couldn't you? Which is still a valid pattern. What we don't want is this one ideally to be the high of the day. We don't want this one to have pushed higher than that one, which means that the bulls have actually managed to push further than they did before. That means that the bulls were not exhausted on candle 2 because candle 3 managed to go further. So that would not be a good pattern. So this low has to be lower than that high. That high has to be lower than that high. And then that one closes below that one. So that's a pretty good 3-bar reversal. And as you can see, it just obviously collapsed off from there. So I'm just going to screenshot that one. Okay. Lovely 3-bar reversal down here. Just scroll in. So bearish price action, bearish price action, bearish price action, pause, double bottom. Yeah, so that was the low of the week. That one was almost, it's ever so slightly higher. Might actually be exactly a double bottom. Exact double bottom. So exact double bottom. So either this candle, candle 1, or candle 2 has to have the low of the week, the low of the day, low of the whatever you're measuring. Rejection to the downside. Again, rejection to the downside, roughly similar there. And we've ended as a bull candle. So that wick is more than 50% of the entire candle body. So lovely rejection to the downside. Bulls taking control. Close of that candle higher than the close of that candle and higher than the high of that candle. 1, 2, 3. Pull, pause, push. Yep. So again, another great pattern there. But the key is this close above that close or above that high gives you that confirmation that this candle really was the exhaustion point. Yeah. So we're now back on the other side of the coin. So I'm just going to screenshot that one. It's a great example. Moving through. Okay, so here we've got 2 3-bar reversals. This one there is a perfect pattern, almost perfect. Look, so you've got the pull of the bears, you've got rejection to the downside, that low lower than that low, nice tight body, meaning that there was indecision, there wasn't any buyer or seller advantage, but the sellers were exhausted. And then the next candle's low is above that candle's low, and the close is above the high and the close of that candle. Absolutely perfect. But what's wrong with that particular candlestick pattern? It's a beautiful example of a perfect 3-bar reversal, but that is not the high or the low of a move. We are going sideways. Yes, it's the low of that 3-bar move, but that's the low of the week. That's the high of the week. We are going sideways. So that is not one that you would take because it's not a reversal at the high or the low of a session, day, week, month, whatever it may be. We're looking for the turning point. We're trying to anticipate to try and get a big move out of it. Yeah. So great example. I'd say probably that is the most textbook example we've looked at so far. But properly, it's in the wrong place. So not a great pattern because of the location. However, it did work. Yeah, we had 1 candle push, but that's it, 1 candle push. So if you were getting in there and you placed your stop below there, that was your risk, that was your reward. You get a 1-to-1 risk-reward ratio. This is a reversal pattern. We're not looking for 1-to-1s. You could take 1-to-1s on all of them and you'll have probably a very high strike rate, but you're not going to make a lot of money with this. What we're looking for is this. We're looking for the big reversals that are going to last for candlesticks after candlesticks. Yeah, there's the end of a pattern. It's either a new shift in market structure, or if it's going to be a pullback in market structure before a new high, we're getting in here and we're riding that 50% retracement on the leg before it continues up. So we're just trying to grab a portion of whatever it's going to do. Obviously, if you think it's reversing and it's going to make a new low on whatever it's done before, and you get in and it moves your way and you get to 2R, by all means, put a break-even stop on it. Not a problem. And then if it does this and continues, happy days. If it does this and does that, not a problem. If it does that, not a problem. But you're trying to pick the point. So this is a great example of a bad 3-bar reversal here. Okay, so this is the high of the week. This is the massive strong bull candle. That's what we call a strong close candle, which basically means that the close of the price action is exactly at the high. Yeah. We then put in a new high, but the candle pauses. But we also have large downside wick rejection, meaning the bulls are in control. So we've got a bull candle. We've closed bullish on the next candle with a lot of downside rejection. We then have a bearish reversal, lower high, which is great. We've closed below the close of that candle, but we have not closed below the low of that candle. And the low of that candle is lower than the low of that candle, but look at the wick rejection back to the upside. Bulls took control again. So we had massive bull strong close buying power, followed by rejection of bears, strong close. Rejection of bears, not quite as strong close, but seriously a lot of rejection in there. Then we put in an inside bar. Then we broke down. So in this case, you would be trading in that case an inside bar breakout. Yeah. So again, another great pattern. 2 IB. Probably heard me talk about that. It's part of the price action toolkit, EA. 2 IB. So that's inside bar. That's a 1 IB. 2 IB would be if that was an inside bar of an inside bar, but it's not. But you've got a breakdown there, basically, which then started that move. That was probably a news event. So it was like the bulls were taking control. We were just pulling back, ready to go long, and something hit the market. News. That's never going to help, is it? But bad example of a 3-bar reversal because of the size of that wick. That wick is more than 50% of the candle, meaning that the bears are not in control. The bears tried to take control, but the bulls beat them back. So very, very important. Candle 3's wick must be smaller. So around my massive monitor. So that's a bad example there of another 3-bar reversal. But these are all 3-bar reversal patterns. Yeah, but the important parts of them are the story that it's telling you. Who is in control of candle 2? Nobody. Yeah. The bulls are slightly in control of it, but they couldn't push much higher. They got pushed back, but the bears couldn't push down. They got pushed back. So no one's in control. Fully in control of that one. The bears trying to take control, but the bulls took more control. Yeah. So that's not a reversal, is it? That's indecision followed by attempted short, but can't do it. Yeah. Doesn't mean it's not going to work. When every single candlestick closes, the odds of it going bull or bear after it are always going to be exactly the same. It's 50% every candlestick. But the story here is we didn't win, so we leave it. In this case, if you'd have taken it, it was an absolute blinder. But it's not the rules, is it? Why that happened is not necessarily because of that price action. So just going back, looking for others. So that's a pretty good 3-bar reversal there. So again, smaller, fatter, chubbier one with a lot less rejection. So this is another type of 3-bar reversal pattern, which does work because it is a bear move. We've got a slight bull rejection there. Then we've got bull candle with a rejection to the downside. But the important part about this one is this is an inside bar. So there's your low, there's your high, and this is an inside bar 3-bar reversal. So then the bulls take control. That high is higher than that high. We close above the close of that candle. We close above the high of that candle, and off we go. So again, another great 3-bar reversal, but totally different rules. No wick. So this is where I'm sort of putting this list of visual examples of successful 3-bar reversals at highs and lows together. It doesn't have to have a wick. If it's an inside bar of a previous candle and the follow-up candle is a higher high, higher low with a bull close above the high, still we have got the reversal, haven't we? We've got the bears not being able to continue the move and the bulls taking control of the market back. We get 4 4-hour candles worth of lovely price action. Again, straight up into highs, then straight back down again. Don't want to make a new low because market structure is long, make a new high. So this is a reversal in market structure being attempted by the bears, being pushed back by the bulls. The bears are then trying to take control again. The bulls are pushing back again. What we're doing is we're going into a range. We're going into balance because there is happiness here for them to buy and sell this symbol and continuously can make money over and over and over again while everyone else gets chopped to pieces. We're just riding the price action, basically. So that is the low of the week. That is the high of the week. That is the actual end of the week, not a 3-bar reversal. But yeah, so that's another great example. So very different pattern, but it is still 3 bars reversing. Yeah. So again, same thing. So going back. So here you've got a 3-bar reversal at the end of the month. So as you can see, the whole thing basically just was bull all month. That was the first reversal you had. The danger, or rather the thing that invalidates this particular one, is the size of this candlestick and then the outside bar. So we've got an outside bar formation there, followed by an inside bar reversal. So here we are not closing below the low of that candle, which would be ideal. We are, however, closing below the low of that candle, which is better. But the high of that candle and the low of that candle is outside the high and the low of that candle. So it is a kind of reversal pattern. However, it's indecision followed by indecision. Yeah, there's no exhaustion here. Yeah, there's exhaustion here and exhaustion here, but there's indecision. So there's no definite, we've pushed up, we've lost. Now we're taking control. We have pushed up. We haven't managed to really do much. We haven't managed to do much. And it looks like they're taking control, but they haven't managed to break that low. So it's 3 indecision candles back to back. Not really a 3-bar reversal, is it? But it is a bull candle followed by a bear candle with a higher high, followed by a bear candle with a lower high, but not a lower low, but the close is lower than that close. So again, all the things that are in play here are the highs, the lows, and the closes of the candles. These are all variations that you can program into an algorithm to say, is it good to take it if this happens? Yeah. So this is what we're doing, is we're building a picture of all the different variations that can be tested. Again, that's a 3-bar reversal, but not a very good one. So let's go back and see if we can find some more perfect examples. Just a quick look at the indices. Stopped out in the DAX. This is an awful market at the moment. It's just choppy as hell. Look at that. That didn't even stop me out. Criminal, this market at the minute. So stopped out on a 3-bar reversal. Would you believe it? Wick rejection, bull. Yeah, but not a 3-bar reversal because we are bang in the middle of a range. It's not the high, it's not the low, it's in the middle. So it's just whatever it is. Yeah, could be a reversal. You know, there's nothing wrong with these. Could still be 3-bar reversals. Yeah, but also this is a bull. Look at that spread. We got DAX CPI coming out, haven't we? So you got a bull candle there, a lovely big rejection to the upside. This looks like it's closing bear. Potentially, it's just gapped down, unfortunately, but this could be closing bear, couldn't it? So if this closes down below that one, you've got a 3-bar reversal there, followed by a 3-bar reversal there. So that one goes bull, that one goes bear. Each other out. It's a range. Why it's important to have them at the highs and the lows. So we'll see if we can close down. Let me just quickly check the news to see if we've had some announcements. There we go. German numbers coming in. Unemployment rate 6.3. German GDP. Right, here we go. So Bavaria has been the first to announce inflation is up. Moved. Inflation is up month on month, down year on year. So depending on how you're reading it at the moment, that's bearish annually, but bullish short term. North Rhine has just declared year-on-year 1.8 versus 1.9. So CPI is going to come out negative for Germany, which means the euro negative. Year-on-year is down. We are on, that's Italian, sorry. Month-on-month, we are up. So it's the same story for Rhine and Bavaria. So annual CPI is down, short-term monthly is up, which should be bearish euro in a normal market. This is not a normal market, as we know. Very little. So it did gap down, look. We have gapped down slightly off of that bear move, but nothing particularly exciting. Right. So down the bottom here, not really a 3-bar reversal in play there at all. Not really a 3-bar reversal anywhere here. Not there either. So we had a nice big strong push. You've got lovely upside wick rejection. Yeah, but that is not a bull candle. That is a rejection candle, and that is a bear candle with a lower low and a lower high. So if this candlestick here, number one, had been a bull candle instead of a bear candle, that is rejection or indecision, followed by bearish reversal. Yeah, close below the close of that candle there, but it didn't close below the low. And again, I think what I'm looking to do here is rank these, if you like, as a absolute perfect. So if you want to take the best possible price action pattern of a 3-bar reversal, it is a bull candle that has a nice long wick on it and closes like that. And then the next candle, and it could have a little wick down there, it doesn't really matter, but the next candle, regardless of whether that was a bull close or a bear close, the next candle basically is got some kind of wick which is lower than that high, and then the close of that candle is below the low and the close of the previous candle. That is an absolute perfect 3-bar reversal in my opinion. Push, rejection to the upside or pause, but the next candlestick does not break that high, and the close of this is below the low of candle number 2. So we're looking to close down here, below where we closed there. That should be higher than that, and ideally that should be higher than that, which shows the rejection. So you've got a high, a higher high, a lower high, and you've got a low, a lower, a higher low, and a lower low. Yeah, so that's the ideal pattern that is going to be the strongest, but it's also going to be the rarest. So we're looking for different ones that are going to give us the same sort of signal, but in a slightly different way. Again, nice big push down, but this is not the end of a move, is it? We are in a range. However, there is a massive wick rejection there, which does create the low of the week, followed by a nice big bull candle that not only breaks and closes above the high of that one and the close of that one, it closes all the way above the high of the previous candle, number 1. So super bullish. And again, that is something we can take into account. If candle 1 closes above, candle 3, sorry, closes above candle 1, that's super strong, isn't it? So not only have we smashed the bears here, we've smashed the bears before. Really strong. Yeah. But again, you're not going to find a pattern like that occurring as often as the others, but that would be an A+. So if we're going to rank these, and this is what I'll do, I will rank these. That is an A+ setup. If that low here was actually lower than all of these, and this was a strong close down here, that would be an absolute A++ setup. Yeah, because we've been pushing down, we've closed at the very low of the week, we've rejected below that low and pushed back up again, meaning that there is absolutely no demand down there for selling pressure. And then the bulls have taken control, and not only taken control, they've absolutely destroyed every bear in the market. Off we go. Perfect. Got another one here. Useless. Middle of a range. Yeah. Nice big bear. Nice big rejection. Lower than low. closes with rejection to the downside, smashes through those highs, closes pretty much at the high there, but definitely closes above the high of that candle, closes above the high of that candle, the close of that candle. Yeah, beautiful. Failed. Why? Because we're just range bound. So all this is they're selling here and they're buying here. That could carry on for days, couldn't it? We haven't pushed. We're not exhausting ourselves, are we? Ready for the profit take. This is the start of the profit take move. I cannot push this anymore. I've got so much P&L. I need to get rid of some of it. Yeah. And there's no one left to buy the stuff anyway. So screw it. Let's get out, guys. That's what we're looking for. That 3-bar reversal, the signal at the top that goes, we're off. Nothing in there really. Now there is a 3-bar reversal pattern in here. So this is where your discretion slightly comes into this. And again, there's filters we can employ to filter these out. Here we have the high of the week going in. Okay, we have a bear candle with a rejection to the upside, followed by a bull candle, yeah, that closed below the open of that candle, but not below the close of that candle. But it put in a new high of the week, followed by a lower high. But look at this candle; it closed above the close of that candle. So not a 3-bar reversal there, but there is a 3-bar reversal here. That, number one, is not a bear candle. It's a bull candle, which is correct, sorry, in this case. It's a bull candle, yeah, followed by a bull candle, followed by a bear candle. So that is a 3-bar reversal, but not as clean, is it? That would be a lovely bear candle. That would look better if it was a bear candle with a wick much higher than that, but it is still a 3-bar reversal, but it's part of a range. Yeah. So an EA with dumb rules would look at that and go, there's a 3-bar reversal, guys. We need to take a short. I'd be looking at that going, but we're just range bound. We've been range bound for 3 days. Why are you getting into a short? The market has not been pushing. It was pushing for a few days, and now it's gone sideways. We managed to put a new high in and gone sideways. Yeah. So this is the sort of stuff that needs to be filtered out. This can be done by looking at how far we've moved this week. So have we hit an RSI? Are we above an RSI? Because if you look at an RSI here, as an example, this is a great example actually of where confirmation of where condition indicators are your friend. So if we stick an RSI on here, we are not going to have a high RSI reading. Yeah. So look at the RSI, flat, sideways. Yeah. We've not been pushing up above a level. We are just sitting sideways. And in fact, when that signal occurred, RSI was coming down. Got a little bit of divergence there, ever so slightly. RSI is not massively extended, is it? As you would expect it to be after a strong push. So that is not going to be a signal, but it is a price action pattern. These are the ones that need to be filtered. This is where you do your back test and you go, how can I filter that out? What indicator can I use that will give me the correct condition after measuring momentum that shows me that when a 3-bar reversal comes, we should take it? That's a good example. So when that candle closed there, you would expect RSI, stochastic, CCI, MACD, ADX, whatever you're using as an oscillator to have been coming down. But when this candle goes in, you would expect it to be above a certain level. In this case, actually, it was quite a difficult one to filter out, wasn't it? Above the 70 level. So it could well be that would just be one of those false signals that you wouldn't be able to get rid of. But again, this is all part of strategy development when you're looking at things. So that one, not a great example. Didn't work. There's another one there. So again, a little bit of an odd example, but it is a good example. We've got 2 actually on here. Potentially, we've got 3. So 4. I wouldn't want to take that one, but you've got this move here, which is a push down, indecision, candlestick there. Inside bar, yeah, there is no downside rejection. That wick is tiny. It is just a basically spinning top inside bar on an inside bar spinning top, really. It's sorry, not inside bar. It's a spinning top with a spinning top inside bar. Yeah, it's contraction. It's not the end of the move, is it? It's not rejection to the downside, it's contraction. Yeah. Then a lovely big push up with a wick rejection to the downside. So it's a sort of 3-bar reversal, but I'm going to screenshot it to show an example of what I would want to filter out. Do not want that as one of the patterns. 3-bar reversal here. Now this one works. Push, lovely rejection to the upside, more than 50% of that candle, making a new high. It's the high of the week. Tick, tick. Lovely bearish reversal. Close below the low, close below the close of the previous candle. Lower high. Beautiful. Textbook. Didn't really work. Why didn't it work? Because we're just going sideways. The market was not pushing hard and exhausting itself ready for a reversal. It was basing. Yeah. So absolutely brilliant. And if you were saying, I want you to take 3-bar reversals when candle 2 is the high of the week, it would have shorted that. Wouldn't have been very good, would it? The high of the week needs to be after a push. So we need some kind of measurement to say, I need you to have got from either A to B within X, or I need some kind of other measurement, like we've achieved average weekly range to the upside. We've hit ADR for 2 days running. Something that says I've been going up multiple X number of candles in a row. So AWR, if you hit average weekly range and you get a 3-bar reversal, 100% guaranteed you've been going up, because you can't get to the average weekly range without going skyrocketing for X number of days. If we hit ADR yesterday and we hit ADR today, you've been pushing for 2 days on a 4-hour or on a 1-hour chart. That is what you're going to see. Absolutely perfect. So measuring ADR, AWR, and then taking the 3-bar reversals after those conditions are met, going to make sure that these are filtered out. Yeah. So let me just screenshot that one. Another good example of not a good one. Really bad screenshot because I missed the top of the candle. A lot of good examples here. And then we've got this one here, which is not a very good example. I mean, none of this is good because it's a sideways week, look, but you've got a bear candle. But look at the bear candle. Look at the body in relation to the size of the wicks here. It's not a strong finish, is it? That is a strong close. This body, the way that I measure it in the position trader EA is I require a wick on the top of the candle to be lower than 30% of the candle. So if that wick to the upside is more than 30% of the candle, I'm not interested. I don't want this to have pushed. Strong close. I want you to finish strong on candle 1. Then I want you to pause or reject. Then I want you to take control. So if you've done that, yeah, and then you do that, I'm not interested. Yeah, unless there was a massive bull candle before that one, in which case that candlestick becomes invalid, doesn't it? So, you know, it's all about finding finding the perfect examples. If you only took 10 trades a year on a 4-hour time frame on an individual instrument, because there just wasn't that many of them, but you only took the A triple plus setups, you're going to get a strike rate very, very high. And the ones that win are going to win well. Yeah, like this. Bang. Beautiful 3-bar reversal. Look. Strong push to the downside. Low of the week put in. Rejection, pushing candle back up to the upside. Now, this is a bit of an anomaly because you've got a higher high and a lower low, which is an outside bar, which is indecision, followed by a bull candle with a higher low, a higher high, and a close above the previous high and above the previous close. So this portion here and this portion here are good. Unfortunately, this dwarfs that bearish price action, meaning there's indecision here at the lows. Yeah, so they're buying up the lows again, aren't they, here? But why is that not a good 3-bar reversal? It worked, so it is a great one. But why is it not a great one? Because all we did all week was just go sideways. So we had a false signal followed by a false signal followed by a signal that worked. So potentially 2 stop outs. Stopped out on that. stopped out on that. That worked. 3R. So a 3R with a 1R loss and a 1R loss gives you a 1R return over a week. Works, doesn't it? Because the strike rate on this is only 33% on those three, but that one is a 3R. If you get a 33% strike rate with a 3R, 3 to 1 risk reward ratio, you can't fail to break even, can you? This is why if you get 33% strike rate on anything, you can get more than a 3R return. Happy days. You're winning, aren't you? So that's a good example there, but it's not the best example because of that candlestick high and low exceeding the prior one. Ideally, that should be lower than that. So we are still bearish, but the rejection is there. That's what we're looking for. Rejection, bearish rejection. We've pushed down and we haven't managed to hold it. Yeah. Put that one in there. So there we go. I think we've got enough examples there, haven't we? There's a lovely one. Beautiful. That's absolutely textbook, isn't it? I'm going to use this one as well. I want to screenshot this one because it is so good. So nice, big, strong push down. Yeah, you've actually got 2 3-bar reversals in here. One of them didn't work. Yeah. So this one here, you've got a bear candle. Yeah, you've got a lower high. You've got a lower low. So we are still bearish, but there's big rejection. The bulls took control of the market, but they failed. So not quite as good because the bulls didn't manage to win. The bears were still pushing them back, although they stopped the bears from going short. But then they took control of the market significantly. They broke that high. They held that high. They broke that high. They held that high. But then the bears took control back. Nothing you can do. That is the end of a nice 1, 2, 3, 4, 5, 6 bar push to the downside. Textbook. You would have taken it probably, but it didn't work, did it? Not a problem. The next one did. Here. So we pushed down for 4 candles. That was still bearish. We closed at the low. So bear with me one sec. Close at the low, put in a lower low, a lower high, and then we close above that high. However, there's a big long wick there. So I don't want to see big long wicks ideally on candle 2. So it is a 3-bar reversal. It meets the rules with a lower low or an equal low. Should be really a much lower low. So it doesn't quite meet that rule perfectly. That rule not quite perfectly met. That is beautiful. So again, it is a 3-bar reversal pattern, but it's probably a C. Not great, is it? Because this wick, I want to see down here. I want to see big, strong rejection to the downside in some shape or form. Yeah. So there's a couple of examples there which are okay. And then obviously that one just continued basing sideways from there. So there we go. Any questions? And again, look at this one here. This is a good example. Look. Big, strong bear, nice rejection to the downside. And then we closed above the high. We've got a higher low. Meets the rules, doesn't it? That technically is a big, strong push down with rejection and a reversal. That closes above there. But the size of that candlestick and then the size of these 2 candlesticks, the bodies of these candlesticks are absolutely minuscule. So again, there's a rule there that could filter those out, isn't there? But you will find some of those that work. So it's just about finding them and taking them and then monitoring them. And the ideal with any kind of back testing and robustness testing is to identify when we get into these things, what is the best thing to do? If it moves on the very next candle after our signal candle and it moves far enough to move ourselves to break even, should we or shouldn't we do it? Should we trail a stop loss with it? Should we set a 2R partial target? Should we get out at 2R? What should we do? So it's about finding the signal to get in, which we know is very successful. But what do we do after? Because it's not the signal that makes us the money. It's the signal that tells us to get into the market. We make the money after the signal, because what the market does after this is how we make our money, not because of the signal. So there's a good couple of examples there as well. I mean, there's another one here as well. Look, But again, that's part of a range. Look at this big upside wick rejection. Again, that wick, if that wick was kind of that sort of size, I'd be much more interested in taking that. But a very large downside rejection there. So we've got bears in control, bulls taking back control, bulls trying to retain control, but being beaten back. Yes, they close higher, but more than 50% of that price action was bearish. Great. Another example. Right. Stop with the pen. I'm just trying to paste that. So I've got a Word document going here. Tons and tons and tons and tons of examples. So my goal here is to, with that document, create a set of rules or inputs for creating sets of rules that I can use to backtest all the different variations and come up with an ABC grade 3-bar reversal pattern. And then obviously we can use that to decide how is best to trade it. There's probably going to be certain instruments that this is going to work better on. So the instruments that have more range of movement are going to probably have more easily readable price action at the extremes of those ranges. So choppy pairs that go sideways a lot, like euro pound, the 3-bar reversals are going to be a lot more difficult to distinguish from ranges to rallies. Stuff that moves bigger, pound New Zealand, for example, is going to be much more conducive to trading this style of pattern because you get a lot more big, strong movement. Lovely 3-bar reversal there, which we managed to get that much movement out of. Yeah, lovely 3-bar reversal there. Big strong push, 50% rejection, bearish close, and that one closed below the low of candle 1. Huge big drop. But the other questions, what do you do when you get a 3-bar reversal in the opposite direction after you've got into a 3-bar reversal short? Because you've had a pattern there that says I should be going long. Should you get out? This can all be tested because you are going to get 3-bar reversal followed by 3-bar reversal, aren't you? There's one there. That's the entry. Stop loss way too far. But you've got a 3-bar reversal here, which said you need to be getting in long now. So the actual trade profit on that maybe was there. Do we need an exit rule in the opposite direction? Yeah, it's all can be tested. So that's my goal, is to build an EA to test this properly. As I said, this is what I used to trade with the strat shadow strategy with the moving averages. This strategy, this PASR, there you go, there's one. Not a great one, but that was the entry signal at support. Yeah, so we're in an uptrend. We're using the moving averages as support, the 2472, 3-bar reversal, price action at support. So this is exactly how I used to trade. But when I was doing this, I was very naive about what worked, basically. So I have a lot more knowledge now as to obviously what you could use basically in which locations. So that's the plan. So good tool for this type of trading would be price action toolkit. Yes. So the price action, well, yes and no. The price action toolkit identifies price action. So the candlestick patterns are hammers and shooting stars. Yep. You've got bullish and bearish engulfings and strong closed candles. IRBs, inventory retracement bars, and 2 inside bar patterns. So 3-bar reversal often will have a strong close. Yep. Followed by, ideally, a shooting star or a hammer. Yep. So that and that are part of the A+ setup. I want a big strong push with a small wick on the top. That would give you a strong closed candle. I want a big upside rejection, which would give you, in this case, because it's bullish, a shooting star. So you could say on the price action toolkit, Note shooting star patterns. So it will draw an SS above the shooting star pattern, and you can set the defaults for what this should be. And then when you get a shooting star pattern, that alerts you to look at your chart. You just monitor the next candle. If, for example, you're trading an hourly chart, and let's say this is a bull candle here with a long wick, so that's the close of the candle. If on an hourly time frame you're 45 minutes in to this candle and we're trading sort of down here somewhere, you could just hit the button right there, because that is a 3-bar reversal. It's got to pull all the way back up to there to be an invalid signal. Now, it could do that in the last 15 minutes. This is where your discretion comes in. If it looks like this is going bearish at some point in that candlestick, whether it be 5-minute, hourly, 4-hourly, or whatever, you can pull the trigger anytime you like. And the price action toolkit is just basically hitting buttons, isn't it? Yeah, that's what it's for. So there you go. So there's a good example. Yeah, strong close candle. So basically the close of the candle is right at the low there. It's a strong close. The close of the candle is got that much wick on it. It's a strong close. The close has got that much on it. It's a strong close. Yeah. That's a bullish engulfing. There's a strong close candle. Yeah. So the strong close candle is we are rallying. We are going strong. So we've opened down here. We've closed up here. There is hardly any opposition to us. Yeah. Strong. So strong close candlesticks will form candle number 1 of your 3-bar reversal. Yeah. Candle number 1. Candle number 2, ideally, something like that. And then candle number 3, something like that. Yeah. Strong close will always be candle 1. Hammer or shooting star, candle 2. But it could be, as we've shown, lots of different types, couldn't it? Yeah, it's not cut and dry. So that is a strong close candle. That is a shooting star. You will get a signal by the price action toolkit on that candlestick. You'll get a signal by the price action toolkit on that candlestick. This is your discretion candlestick. This is what you're monitoring. This is your signal, your entry. So if you were to get on the price action toolkit, it goes strong close, shooting star. You know you've got a strong close, shooting star. What's next? If that is not the high of the day or the high of the week, or that is not the high of the day or the high of the week, not a play, is it? Or the high of whatever. Yeah. If it's a push on a 5, you know, I say the high of the day and the high of the week because obviously, as you know, I find higher time frames way more reliable than lower time frames. But price action is going to play out. It's fractal. It plays out on all time frames. If you look at a 5-minute chart, you will find 3-bar reversals everywhere. Yeah. The 3-bar reversal comes before the reversal alert. Look at that. Absolute textbook today on EuroCAD. This is the low of the day. Here. Bearish candlestick. Rejection to the downside. Hammer. Bullish engulfing. 1, 2, 3. But not perfect because there's a lot of downside wick rejection there. There's a lot of bullish price action in there. Is it 50%? No. But what is the best thing to use? 50%, 40%, 30%? Push, pause, pull gave you a reversal alert. So you got a push there, a pause candle, but I mean, it's a lot of upside wick rejection and a massive bear candle. It's still a higher low and a higher high. So candle 1, candle 2, candle 3, close below the low, 3-bar reversal. Just happened to give you a reversal alert at the same time, which is part of leg 1 of the M pattern reversal. Inverse 3-bar reversal, look, bull candle, big wick rejection to the downside, a hammer, wrong place to have a hammer. Hammers should be down at the lows because it's a downside rejection like that. We've got one forming right now, look. It's not going to be a great signal because it's not the low of the day. It's a higher low. But if we are trending low, reversal, high, higher low, higher high, higher low, 3-bar reversal at the higher low, we'd expect to put in a higher high if we are going to trend up today. Yeah, so this is 3-bar reversals will work obviously in market structure, which is why I say it hasn't got to be the higher the low or the higher the day. If you're trading the hourly and the 4 hourly, by default, you probably do want them at the higher low or higher the day because you're looking for the reversal. But if we're intraday trading on the 5-minute chart and we are expecting the market to trend up today because we put in a low, a high, a higher low, a higher high, we're expecting a higher low. So if we see a 3-bar reversal on a 61.8, 71.9 retracement or in a propulsion gap making a higher low, take it. Very easy stop loss, isn't it? If you want to be super secure, stick your stop down here below this one. If you want to be ultra secure, stick it down there. You've still got a risk of that much and a reward, even if it double tops, of 2R. Plenty of room. But if that comes bare now, it's not a 3-bar reversal because there's no bull price action. This candlestick, only rule 100% is that has to be bearish. That has to be bullish. This has to be indecision or rejection. It doesn't matter if it's a bullish or bearish candle, really. Yeah, but it needs to be rejecting. Now, this is turning into a 3-bar reversal. You've got 2 minutes left on this 5-minute bar. Now, we are buying straight into propulsion, so they might just smash this straight back down again. There is an argument here for being a high, low, lower high, and we're going to put in a lower low. Market structure is actually bearish, or you are bullish. This is a great example of me even reading price action. I'm looking at the same chart and I've got 2 opinions because we're going sideways. We've got a reversal alert long, we've got a reversal alert short. We've got a bearish price action structure, market structure. We've got a bullish market structure. Which way is it going? 50-50 shot. It's either going to be a bullish market structure or a bearish market structure. I can't tell you which, but if it's bullish, this is your entry. If it's bearish, you've missed it. Take your pick. This is the problem with trading, isn't it? For this to go up or down, there has to be somebody with an opinion of shorting it, and there has to be someone with an opinion of buying it. Right now, because it's going sideways, I'm of both opinions. So should I be trading this? No, move on to something that's going parabolic and look for a reversal in that. You're going to get a much better reward out of it. The sitting on your hands, biding your time, being patient bit that everybody has a trouble with, isn't it? But if you need to be in the market and that closes a bull candle within the next 43 seconds, well, watch it. There's a signal. 3-bar reversal is the signal, but the condition of highest high of day or RSI, etc., is required to filter those out that present in a range. Yeah. So a strategy consists of a condition, a signal, an exit in loss or a backup plan, and an exit in profit. Yep. So there's 4 elements you have to make a strategy. The signal is the 3-bar reversal. The condition is, if it was, the low of the day, for example, or the RSI extended. So there you go. That is a long. I'm long. Okay. But I'm not going to do this. The VPS account, so I haven't actually put a trade on this at all. So there you go. There's your signal long. If we're going bullish, we should put in a higher high, but I'm going to be conservative and go, well, maybe we're not going to do a higher high today because we're quite range bound. So let's see if we can double top it. Reward, risk. 2R. So there is no condition here. My condition in this particular case is I am a bull. That is my condition. I have seen a low go in. I have seen a high go in. I've seen a reversal in structure. I have seen a higher low go in. I have seen a higher high go in. I am anticipating a bull move today because of what I've seen so far. So the condition is I am bullish. I'm not using an indicator for condition. I'm using me. There is my higher low. So if I am right, my target would be somewhere like that. If I believed in channels. You know, if that goes up and knocks off the top of that propulsion gap, it's either a propulsion gap rejection, or you speak to someone in another forum, they'll go, that's a channel rejection. Or you'll speak to someone else in another forum and they'll go, that is a trend line rejection. Or you'll speak to someone else in another forum and they'll go, that's a high of day rejection. Or you'll speak to someone else in another forum that's doing ICT and they'll say that's a stop run. Or, see what I mean? There is a billion ways that you can say why something's happened. None of them are right. They are all right. Market will do what it will do. You have no control. You get to press buttons, bullish or bearish. That's all you have. So this is your signal that says that the bears have looks like the bears are running out of steam. If I'm right, it's going to go up here. Now it might do this and put in a lower high, in which case then you've got a symmetrical triangle contraction. So now you turn into a symmetrical triangle trader and you go, okay, that looks like it's a symmetrical triangle contraction. It's either going to break high or low, but there's a good chance it's going to come back down below my entry price. So what I'll do is I'll move my stop up to there. And if that doesn't happen, I will just take a small, tiny little profit on it. That's where your discretion comes in. You don't know where it's going. I don't know where it's going. What I can see is that the bears have started to run out of steam on 2 higher highs. It's good. I have no idea where it's going. This is what trading is, isn't it? It's basically putting a strategy together, which you have seen in the past has created an edge long term. You play that edge out over and over again in the hope that what you saw in the past is going to repeat itself. The condition indicator can be in many things: RSI, ADR, CCI, MACD, stochastics, you, me, market structure, support, resistance, propulsion, demand, supply. It doesn't matter what the condition in the market is. It goes with a signal to create a strategy which creates a risk-reward profile that you wait to play out. And you will either let it play out, walk away from your charts, or you will watch it and adjust it as you go. It's either mechanical or discretionary. That is all trading is. It's placing risk in the market and controlling risk in whatever shape you form you want to do it. You can place this trade now, remove that stop loss, and position trade this. So if this is not going to be a higher low and we're going to break down today and make a lower low, I'm going to put a backup plan in place. What I'm going to do is I'm going to come out on my chart and look for where we're going to turn. I've got a lovely low here. This is last week's low and that is the previous week's low. So what I will do is if my instinct is wrong, it's going to break down. So I will scale in with a second entry there, move my price and wait for a 3-bar reversal pattern to appear somewhere in this area. And I will take a 3-bar reversal pattern here, which will average me in. And if it bounces off of this weekly low and the previous weekly low, which I'm expecting it to, the condition for entry 2 is support. The signal for entry 2 is a 3-bar reversal, a moving average crossover, or a reversal alert. Doesn't matter which I use, does it? I'm looking for a reason to execute a strategy. The strategy in this case is a position trade where I move my price and try to exit an incorrect trade. Just a different way of trading. But all I'm doing is placing risk in the market. I'm just accepting more drawdown as a position trader than I am as a stop loss trader. As a stop loss trader, I am taking losses and guaranteeing them. As a position trader, I am not guaranteeing any losses. I am taking more drawdown and using smaller risk. Condition, signal, target. The target is an exit in both directions, or it is a plan in both directions. So someone like Tom Hurgard, for example, you know, his plan when he enters a trade is not necessarily I'm going to put a stop of whatever and I'm going to put an exit of whatever. It could be that if this pushes up, I'm going to add. So his plan is not exit, it is add and scale in and move my average price up to make my average worse with the double bubble reward. But if that goes wrong, you've got double the loss. Yeah. But you have to have a condition, a signal, And that is your entry criteria. Your exit criteria is what makes you the money. What happens next, which you have no control over, is what makes you the money. You control the risk. You control where you're going to exit. You control where you're going to exit to the upside based on the conditions that you have seen repeat themselves over and over and over and over again in the past. All you have. Yeah. So, and this is what we will look at. That 3-bar reversal was a B, maybe a C+. The reason for me it's a C+ is because this is not the low of the day. It's not a D because I can see market structure. I have no extension on RSI, which I'd like to have, because that 3-bar reversal at RSI extension was beautiful. This 3-bar reversal is not got that condition. It has got that condition. This one had that condition, which would have given it a negative for me because the market was actually bearish. So I'm taking a mean reversion against trend, which knocks it down a mark. But when are you ever going to take a reversal trade that is not against the trend? Because by default, reversals have gone up. You are fighting the stream of order flow. But the order flow has just told you it's run out. It's a confirmation pattern. We have to wait 3 bars. On M5, we have to wait for a minimum of 15 minutes of bank and institutional trading to give us a clue. On a 1-minute chart, you have to wait for 3 minutes of price action. On an hourly chart, you have to wait for 3 hours of price action. That's the whole morning session before they go to lunch, before you even get an indication that they might be going short after lunch. If you're trading the 4-hour chart, you're waiting an entire trading day, 12 hours. You wake up in the morning at 8 o'clock, you don't get a signal until dinner time. But it's all the same. Every time frame is just a visualization of price over time that we construct as human beings artificially to tell us that something is happening in the past. Does not predict the future. But if we see something happen over and over again, multiple times in the past, there is a probability that is higher than 50% of it working, if that's what it's proved. If you look at every 3-bar reversal at high of day and low of day for the last 6 months on an instrument, and it comes out with a strike rate of 40%, you either go, screw that, that's no good, or you go, hang on a minute, I've got a strike rate of 40%. Did it move 2R every time we got one? Yes, that is a strategy. If I'm getting 2R with a 40% strike rate, I'm going to go to a prop firm with that because I'm just going to make money constantly. So if you lose 40 every time you trade and you win 80 every time you trade, you're going to make money. We'd lose 40, you know what I mean. Addition for ORB, if clean, open, wait for 3-bar reversal, could do. You're adding automation on top of automation on top of automation, and there's too much of it. If the entry is clean and you wait for a 3-bar reversal to exit, don't forget bar 3 is down here. Bar 2 is up there. Your trailing stop is the best thing to use in case it's a continuation. There's an argument for using the 3-bar reversal entry on pullback after it's stopping out. But there's too many rules. You know, this is the thing with, there's a fine line between automation and trying to make something automated to make you money consistently and using automation to partially automate yourself. There is not, I don't know any trader that makes money on full autopilot out there, not one. Even with ORB, I am interfering with ORB. SIH, I am interfering with SIH because I can see price action. I can read price action and I can see that this thing looks like it's stalling out. Yesterday, when we hit the highs on the NASDAQ and the S&P yesterday, every bone in my body said, take it. Yeah. At NASDAQ, actually, yeah, it was here. Look. Every bone in my body there said, take the money. You've got $200. I said this in the live room. No, I didn't. Did I post it? Maybe, I don't know. Maybe I thought it. But when it hit that level yesterday, I was like, this is going to bounce off because it's bounced off 3 times in the last 2 days. All week, it's been bouncing off this high. This is the high of the week. And it did. And it stopped me out on the S&P. I could have got out with $200 in profit, but I didn't. That was my decision, but it was the wrong one yesterday. But this is where your discretion comes in. You cannot program every instance. There you go. That was my stop out on the S&P. That was where I said, that's the high of the day. And I called it perfectly. It went afterwards, which is fantastic. But there's such a thing as putting too much automation into your trading. And you cannot account for every instance. I've just come up with a document here with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 variations of the 3-bar reversal. Which is the one you use and why? If you use them all, you're going to fail. If you use 2 of them, you're going to miss 5 opportunities with the others. There is never going to be something that you can put together to work all the time because the market is random. It is not the same all the time. The way that a 3-bar formation happens, a 3-bar candlestick pattern happens and forms is different every time. You will look at one. There's a good example. Look. So you'll look at that one and go, beautiful drop. Yep. That wick there is higher than that wick there. And that wick there is lower than that wick there. But that is a higher high and a higher low with a close above there. It's not perfect, but it's worth a punt after a drop like that in the Globex session on the S&P 500 at 6 o'clock in the morning or 4 o'clock in the morning as this was. I wasn't awake for it. But that is not one that I would program in and go, I want to take that. But if I see it and it happens to fall in line with the pullback from yesterday's new high, it's worth a punt because it's a support level. But where do you draw support? Here? As a block? Here? See how many variations there are I'm coming up with on taking this one simple 3-bar reversal that's not a great one. It's a C at a B support, A support, B support, because it's part of a pullback. But it worked. Yeah. And if you were short this from up here, I would put my TP here because this is the last area we bought from. But then again, I would also look at this propulsion gap here and say, I probably want to get out if we come and reject this. And this looked like it was rejecting there. So I'd have probably got out there if I was watching visually, or I may have dragged a stop loss down to somewhere like that. So that if that propulsion gap did hold and we are going to push up, I just take that much money. But there's 2 different things I could have done there. Which is the right one to do? Both. Which one should the EA do? Flip a coin? Do you want to put random things in there? But then how do you backtest random exits? You can't. See what I mean? There's just too much. And this is a problem that happened with the market reversal alerts EA. I put way too much functionality into it. Everybody said to me, can you do this? Can you do that? Can you do this? Can you do that? And I did it all. And I ended up with an EA that just didn't work in the backtester because there was so many calculations and so much functionality, it just ground to a halt. You get the same problem with something like the ORB. You're going to get to a point where, yes, it would have been good to do that in that instance, but you shouldn't do it that often, or you should do it every time. Or, you can prove to yourself in backtesting by curve fitting absolutely any outcome. But the one that you use should be you. And I don't know, this is the thing. People watch me on stream, and I get questions every now and again. Why did you get out there? Well, because I just felt that was the place to get out. Why did you feel it? I don't know. I just felt it. You get a feeling after a time. You see stuff happening. It gets burnt into your retinas, and you go, "This isn't good. This isn't good." There's something in the price action that tells you this. This is a great 3-bar reversal. Look at that. Beautiful. Strong push up. Lovely big wick rejection. Lovely big bear close below the close of candle 1. Super strong. Yeah. Now, if I miss that, anywhere in here, which is a propulsion gap, I'm happy hitting the short button. So I missed that. So do we set a rule up to do this as well? There's too many ways to get in when you're reading price action or when you're using any type of trading strategy. But if I get in short here, everybody that's got in long here on this resistance bounce, I am fighting. I'm fighting 4 lots of buyers, and I've got 1 load of sellers that couldn't get through the buyers. So is it a great short? Don't know. But what I can do is I can apply risk to the trade and say, if I'm right, I suspect we'll go to here. Is that reward better than that risk? Take it. All of these calculations on every single opportunity that you see with a signal and a condition in the market are going to be different. There is no way to program something for every possible permutation because there's just, there is so many signals. There are so many conditions. You have to pick something that you like the look of and get something to signal when it happens and then visually look at it. And, this is why I built the dashboards, the ADR dash, the RSI dash, the market reversal. There you go. That's a lovely 3-bar reversal working out. All these dashboards. It's so that I can go pound New Zealand, 82%, 4-hour RSI. Fantastic. Let's have a look at that. Do I want to take that? We've got bull after bull after bull after bull. No, I don't. I'll wait for some signals to short it. Now, right now I'm looking at it and going, they couldn't get through there. 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 The bears started to take control, but they couldn't beat the bulls. The bulls have tried to take control again, but the bears are really battering them down at the moment. So the bulls can't get through that level, and the bears are starting to gain momentum. Good time to short it, potentially. Is there a level that we're at that would mean that there's potentially sellers coming on board? Not really. So we might be pushing up to 150 ADR. So my plan is if I short this now and it doesn't work out, that's where I'll take a second and average into that leg and pull out when it comes down to that propulsion gap. That's my plan. But the reason I've just done that analysis was because this went ping. I can't program that into an EA. You might look at that and go, what are you on about? It's going all the way up to here. If I post that analysis in any trading forum, right, I'll get a load of people going, oh, rubbish. What are you talking about? It's a bull move. What you want to be doing is just waiting for a pullback of 50% on that and then longing it. You're mad shorting it. Their plan is different to my plan. Their strategy is different to my strategy. It will go up, it will go down. And there's a 50% probability of it doing one of those two things. I can be right, take my profit. They can be right, take their profit. You don't have to slam each other in forums all day long and slag each other off telling you you're wrong. Why don't you both be right? I don't care what anybody else is doing. I do what I do because that's what I see happening. But if I'm wrong, I have a plan. That's the important part, is the plan. It's either a stop loss, a hard exit, and try the next one because you know you've got a 60% strike rate edge, or it's I'll try that, and if that doesn't work out, it's going to be so extended by the time it gets there, it's definitely going to come down hard. That's my plan B. If you don't know what position trading is, plan B is not even going to be on your radar, is it? But this is why you have different EAs and different tools and different indicators for different jobs. RSI shows me when there's been a sustained push. ADR shows me when there's been an intraday push. Reversal alert shows me when there is a change in bullish or bearish structure. Propulsion gaps show me where the market orders are for big participants. They all have their reason. This is a weekly high. There are sellers there. We know that because it didn't get higher than that week. So that's where the sellers stepped in. They're probably still there. So when we get there, if I see a 3-bar reversal, I'm going to put more risk on there than I would do if I saw a 3-bar reversal here, because it's pointless. If it gets to the high of the week in the middle of nowhere with no confluence and RSI is not extended, it's not a good signal. It may work out. The odds are the same. It will or it won't work out. But if it was there, I'd be more confident. But if you program just that, you'll miss those. If you program those and those, it will take too many trades. See what I mean? It's just, you have to accept that there's got to be manual analysis and manual intervention. EAs are there for me to automate it. So I'm short pound New Zealand now. If I go out today, which I have got to go out today at 11 o'clock, I've got a meeting. If this thing screams up to there, by the time I get back today, and it's got some kind of bearish price action, a 3-bar reversal or a market reversal alert on the 5-minute time frame at ADR, it will short for me my third entry. I will come back and go, okay, I'm 3 short now. What am I going to do with this? I'm going to analyze it, but the EA is there to automate me while I'm not around. And it's there to take trades for me when I'm not paying attention. It's not there to make my money. It's there to just do the rules I've set. Rules are incredibly complex. Or incredibly simple. But like I just said, there's 13 different rules for the same thing. Yeah. This alone is a massive EA. All these conditions. You need to name the condition. You need to plan the condition. You know, and it's the difference between saying the wick has to be 70% or 60%. That will give you a different signal on a different broker. If I trade that with a 60% wick, and my wick is 61 and your wick is 59 on your broker, I get in short and make 10% on the trade. You don't. That's the difference between a month winning and a month losing. You need to not have the wick as strict as, you know, you can make it as strict as you like, but if that is above that, happy days. If that is above that, happy days. We know we've got a push, and that is maximum of X%. 20, 30, set it at the weakest one, and then, you know, you've got some wiggle room. Yeah. But as long as that is higher than that, yeah, and there is a big rejection there, which is more than 50% of that candle, I would class that as an upside rejection. What happens with this candlestick? I want that closing below there, ideally, but if not, at least closing below there. And I don't want that being above that one. That's enough to give you a pretty strong reversal pattern. But why not test all of them? Yeah. Because you're going to see a pattern that looks like that, but it's not quite that. But you're going to look at it and go, it's a double top twice this month. I'm there again. It looks like they're selling, but that's not a perfect signal. That's discretion. So what you have is the EA program to take them maybe, or you have an alert system set up that goes, tell me when they come up and I'll eyeball it. Yeah. So building a dashboard, nearly closed that then, I need to save that. Oops. 3BR. I want to save it there. I want to save it there. So yeah, so I mean, setting up a dashboard is probably one of the best things to do, because you can set it up to just tell you when they come. Yeah. And this is the beauty, and this is why I love high time frames. Realistically, in a day, you might get 1, maybe 2 signals on an instrument. Some days you're going to get none. Yeah. I mean, there were none on Monday. Oh, yes, there was. No, that was a bull after a bull. That was potentially one there. So there was one on yesterday. No rejection to the downside on that, but it is still a 3-bar reversal. It's just not it's not a rejection one. You know, this is where you need a rule for a rejection 3-bar reversal and a non-rejection. If that low is above that low, we still call it out and we go, this is a signal, but it's a B. Have a look. Do you like it? Yeah, take it. What did I just take that trade on? EuroCAD. Okay. Booty. So let's not muck about. Risk on it. No risk trade on it. So can't lose. You know, and again, this is the next thing you do. Right. I've got a no risk trade, so I cannot lose on this. So what do you do now? Depending on how your day, week, or month's gone, you might go, look at that propulsion gap. On the 15-minute chart, that's a lovely big fat propulsion gap. Look. Even on the hourly chart, that's probably a lovely big fat propulsion gap. Target the middle of that propulsion gap instead. Actually, while we're at it, let's go for a high of the week. We've got news coming out this week. Yeah, so we've got in on a 3-bar reversal in the 5-minute time frame. I've analysed the chart and I've gone, screw it. Let's go for a 77 pip reward on a 12 pip stop, which is actually now risk-free break-even trade. You can't program this into an EA. You can, but this actual instance is my instance of what I've seen and done with you guys this morning, just at random, from what I've seen on a chart. There's an argument for sticking it up here, isn't there? That's ADR. Why can't we go to ADR today? Why am I not targeting this? Good question. Let's go for an ADR hit. Got plenty of news. Now what's the reward on it? The risk was 77. The risk is now 105. 7.7 is now 105. It's a 9R trade. It's probably going to stop out. If it doesn't, what have I lost? Right, there we go. Any questions? I think I've covered that in detail. So yeah, my plan is to try and create an EA to do this. I've got the logic for 3-bar reversal built into the position trader EA. So it's a case of ripping that out and modifying it. But I want to set up lots of conditions to test this all. I want to test high of day, high of week, highest point in X bars, all that sort of stuff. So it's more a case of looking to build an EA so that I can visually test it, and then you can eyeball it and see what the best thing to do is with trailing stops, with stop losses, targets and things. And we can set up a static risk reward based strategy on it, which is risking X, which will be below the low of candle 2, below the low of candle 1, or below the low of candle 2 plus 10% of ADR, whatever it may be. And say, right, let's just see how many times we get a 1-to-1 out of it. How many times do we get a 1.5 out of it? How many times do we get a 1.2 out of it? Where can we push it to? Which ones do we get a 1.2 out of? Which ones don't we get a 1.2 out of very often? Is there a particular pattern where it has to have a hammer or a shooting star? Are those the ones that always give us the 2Rs? If yes, then we ignore the rest. Yes, we don't get many trades, but we take twice as much risk on them because those are the ones that always 2R or 80% or 70% or whatever it is. It's a case of that's what strategy development is all about. Finding the edge historically, testing the edge in robustness, so taking a period of time that you've not tested on and placing it there to see if it still works, and then you forward test. And if the forward test comes out the same as the robustness test, or the out of sample test, which comes out the same as the in sample test, you have a strategy and an edge. Yeah. But I wanted to use price action because it's something that I've always used and I get asked about all the time. With the indicator, it's basically, why do you wait for this? Because it's a structure break, and everyone else is like, well, I get in at that. It's like, yes, you can also get in at that. This is the precursor to this, isn't it? 90% of the time. There's your 3-bar reversal entry. There's your reversal alert entry. They both are currently working. This is pure price action. You've got to have rules. There we go. I'll leave it there. So obviously you can use this in any chart, any time frame, any instrument. Works in stocks, everything. It's price action. Price action works everywhere. Short on the DAX. This is turning into another chop fest. God, this is a pain in the arse, this market. So I'm back at 12:30, back at 2:30, and we'll be trading the New York Open. Unfortunately, there's a potential 3-bar reversal forming here. So we'll see how we get on with this DAX trade. Obviously, we've got 793 to claw back today on top of yesterday's 700. Well, I have. This is going to stop out by the looks of things as well. So looks like we're going to be a $1,200 down session. I'll just let it kill me live on stream. Might as well. I'm going to do it now, is it? Oh, I've got 10% on that. Just loosening my stops up a little. Don't really want to use 10% stops. They're too tight at the moment. That was my fault because I've put the new version of the EA on here. I've done that on the US as well. No, the US I did change to 15s. That's right. Okay. So yeah, those were a bit tight, those stops. I don't think it would have made any difference today anyway. So the stop loss would have been somewhere around here. But yeah, it would have made a difference, wouldn't it? So that stop out there was on a 10% stop. The 15% stop would not have got hit. Well, I mean, they spread me on that, so they might have spread me on that. But so that would actually be in profit now. Just these 15% ADR stops that I'm using at the moment, because I'm using a 20% or 15% range, I'm basically saying get me as close to the edges of these ranges as you can, because we've got such a choppy wide market at the moment, which is non-directional. I want to try and keep those stops tighter, so looser. So that still would have stopped out that long. That would definitely have been a loss anyway. But that one would actually be in profit now, unfortunately. So never mind. Right, I'll leave it there. Anything you need, let me know. I will be back this afternoon at 2:30. If you've got any questions on anything we've covered today that you've forgotten to ask, stick it in the members stream. If you've got any suggestions as well on conditions that you think would be useful for a reversal strategy, also let me know. So I'm going to be looking at using highs and lows of day, week, and period of time. So the high or the low of the last X, just because it's a price action pattern. But if there's indicators you think you can find that would be useful for this, I would say they probably need to be fairly fast moving ones. Yeah, let me know. But as I say, price action rules, basically indicators lag, so it makes sense to use price action highs and lows with a price action strategy, and then obviously support resistance. So, all right, have a good one. Anything you need, let me know. Other than that, I will see you hopefully this afternoon. If not, I'm back on Friday. Have a good day.